I have with me the one man who has possibly all the answers to the problems engulfing Yes Bank, private sector banker Yes Bank, which is in deep trouble. SBI chairman Rajnish Kumar, who is going to take over the bank in the next few days. In fact, he has confirmed and he has addressed the issue of acquiring the bank well before the 30-day deadline that the centre has set for the SBI chairman. Welcome, Mr. Kumar, to the show. We want to understand from you what is exactly the status of this acquisition. Where are you on this deal? How quickly can you take charge of Yes Bank and the problems that it is under?
So one is, let me clarify that this is not acquisition. This is not the right word to use.
Okay.
It is a strategic investment decision by State Bank of India, where as per the draft scheme which has been circulated and put in public domain by Reserve Bank of India, the boundaries for this investment has been set.
Sure.
What it does say, that State Bank of India will invest minimum 26%. That will be locked in for 3 years. But we can go up to 49%. So it cannot be any way considered an acquisition by State Bank of India. The State Bank of India is not taking over this Yes Bank, but what it is doing is that as an anchor investor and being a credible anchor investor, which gives confidence to the other investors as well as the depositors and the general public, that an institution of the stature of State Bank of India is standing behind Yes Bank in their effort to mobilize capital. It is a public knowledge that in last 1 year there was an effort going on by the management of Yes Bank to mobilize capital, but for some reasons it could not succeed. And in fact, many investors approaching State Bank of India that if you step in whatever capacity, then it will give us confidence and we are willing to put in money. So let there be a complete clarity that it is not a takeover at all. It is not a merger. It is not even a subsidiary. But yes, if we are holding 26% minimum, then it is some sort of an associate for the State Bank of India, and State Bank of India will provide support by way of by nominating an MD and CEO, and we will have 2 board seats as suggested in the draft scheme. The bank will be managed and run as independent private sector bank as it was, by a board which is competent, professional, of very high quality, and there would not be any day-to-day interference from State Bank of India, but we will stand behind it, having taken the decision to invest anywhere between 26% to 49%.
So this is how you're ring fencing basically the State Bank of India and who are the investors. But how soon? When does this happen? When does the funding happen? And basically what the customers want to know is, when do things get to normal?
So I think RBI governor, he categorically stated that though we have given a timeline of 1st April, but definitely it will be the effort of Reserve Bank of India and Government of India that the moratorium on the bank is lifted very soon. There is a certain process to be adopted, and within the minimum possible time this process will be completed. As I think yesterday also I commented in my interaction with the media that State Bank's legal team, the investment team, supported by merchant bankers like SBI Capital Market, so we all are working 24/7 We worked yesterday, we worked today, we are still working, and as soon as complete clarity is there about the mobilization of necessary share application money, as well as the process around the receiving of comments by Reserve Bank of India by tomorrow, and then the process which Reserve Bank and the government has to follow about the notification of a scheme. So as soon as those processes are over, it would be possible to lift the moratorium.
Have you decided the co-investors? Because you have said that there's a lot of interest and 26% is yours. What about the remaining 23%?
So we have, many investors have reached out to us, and many investors we have reached out, and we will have a clarity within next 24 hours, and we will be able to give all those name and outlines to Reserve Bank of India, because any investment in a bank, it is governed and guided by Reserve Bank of India guidelines of fit and proper, the guidelines of SEBI around FPI. So there are certain regulatory issues. So once we have the investors who are willing to co-invest with State Bank of India with firm commitments, once we are very comfortable, confident and have binding commitments, we will approach Reserve Bank of India and tell them that this is the list of the potential investors, and then apart from SBI, where there is a complete certainty that we can invest amount between 26 to 49%, rest it will be decided by Reserve Bank of India. But a few things again for the benefit, that anyone who wants to invest above 5% in a bank, it requires a specific fit and proper criteria from Reserve Bank of India. Up to 5% investment, in any case there is no issue.
So there's no, is LIC participating as well?
No, as I said that LIC, I think they already are an existing 8%. Investor.
Yes.
But and everybody is welcome, but as of now we have not approached LIC, and there are many other co-investors. So LIC, their existing investment is there, so it is not necessary that LIC has to necessarily participate.
Okay.
But if they want to, so obviously there is no issue around that within that guidelines of less than 10%.
So Mr. Kumar, from the customer's point of view, does he expect funding coming in and things starting to get normal sometime next week?
I won't comment on that, because as I said, there is a certain process to be followed that I will leave it to Reserve Bank of India. But the intention, I can tell you, is to do it as quickly as possible, and everybody is working in that direction.
Mr. Kumar, can you give us an idea of how was this news broken to you? When did you first get to hear that you may need to take over, and when did you take it to the board? How was this news broken to you?
Rajiv, I think these questions are not as relevant. This we can talk later on, when because what is more relevant at this point of time is about lot of misinformation is being spread on the channels.
Yes. So
please don't mind for saying me so. But even on your channel today, I was amused, in fact, and rather bit disturbed also, that a new formula where market capitalization and deposits are being linked to determine the health of the bank.
No, I'm coming to that. I'm precisely coming.
40 years of banking experience,
I'm coming to that, Mr. Kumar.
So
the concern
I have never seen this ratio.
The concern, Mr. Kumar, is obviously regarding, as far as the investors are concerned, is about the NPAs. You know, how bad is the NPA situation in the bank, and even the other debt that the bank has. Do you have visibility on how how bad is this loan book?
No, that all potential investors have. Quite a bit of information is in public domain. Yes Bank will be declaring their results on 14th of March.
Okay.
Let us wait for those results also. But when these investors, including State Bank of India, when they will make this investment, they will make this investment by keeping their eyes and ears open. But to assess the health of the bank, only my request is that there are several ratios which are used.
Yes.
So first and the foremost is what is called the capital adequacy ratio,
Yes.
as per the Basel norms. Then there are ratios like gross NPA percentage, net NPA percentage. So whenever a bank declares result, whatever is considered to be the material information for determining the health of the bank by law and by statute, we are required to disclose, and it forms part of the balance sheet. So my only limited request to you and all channels is, please don't invent new ratios. Let us go by the disclosure made in the balance sheet.
Is there a visibility you could give to the customers and to the investors, Mr. Kumar? One, to the customers, how soon? When do they start to? Because PMC Bank, the limit has still not been taken out. It's still about 1 lakh. It is quite substantial, but it's still 1 lakh. And if a PMC customer cannot withdraw, people are worried that can Yes Bank customer, will this prolong beyond the 3 April deadline as well? Because if this 50,000 becomes 75,000 and then 80,000, I guess that's how it's going to move. But how soon does this restriction get removed?
No. No, there is no question that there will be any extension beyond 3rd April. I think this is the same question again you are asking.
Yes.
What I am saying is that State Bank of India, Reserve Bank of India, we all are working that the situation gets normalized very quickly. Now, I can't tell you a specific date, but definitely through your channel and to the customers of Yes Bank, I can say with confidence that the moratorium will be lifted much earlier than 3rd April.
And can you assure the depositors at least that beyond 4th April, they could expect to withdraw as much as they like, whatever is there in account?
Again, I am saying 3rd April, let us not talk about 3rd April. It will happen much earlier than that. We are aware as
Okay.
State
So
Bank.
you are assuring,
RBI
Mr.
is
Kumar,
aware that
you
we
are
in the
assuring the
month of
depositors.
March.
Okay.
And
So you are assuring the depositors that they will be able to withdraw whatever funds
So
they have
I-
well before the deadline?
yes,
Oh, that's good news, I think. What do you see as the first
that I
few
am
steps?
assuring with 100%.
Okay, that's a very good news as far as
No,
depositors
the
are
steps
concerned.
are very clear.
That's
Once
very good
the,
But what would be your first steps when
Yes,
when
that's what
the
I'm
investment
saying.
happens? What will be your first steps? Because after the acquisition, or I shouldn't say acquisition now that you've clarified it's an investment, strategic investment, the problems that RBI has identified
right
is
word, not right.
asset deterioration, governance issues, false assurance of capital raising, depositor withdrawals. These are all the problems plaguing the bank. What are the ones that you will take head on as soon as you get charge of the bank?
Right. Again, please don't use the word we get charge of the bank. So
Okay.
these two, acquisition and charge of the bank, these two words I would not like to be used. But the process is that this is under section 45 of RBI Act. That is where this scheme of reconstruction has come. And there is a process where the draft scheme has been put in public domain. Tomorrow is the last date for commitments from State Bank of India, Yes Bank, and anyone else who wants to give comments on this scheme. right? So
Yes.
that first step is over by tomorrow. By tomorrow also there will be complete clarity that apart from State Bank of India, who all others are who are willing to co-invest in a very quick manner. This is important that the investor, whoever is doing it, we are ready, State Bank of India, because our in principle approval from the board is there, and for the final approval also we will be going to our board and we will get it done very quickly, and once that is done we will inform the stock exchanges, and that news will also be in public domain about the exact amount and the number of equity shares which State Bank of India will be acquiring.
Mr.
So there
Chidambaram,
is a process
Yeah.
for State Bank of India also to be followed.
Mr. Chidambaram has stated that
no, let me
this
first
was,
explain you the process. No, just first listen to me, because you all wanted the process.
yes.
So once we tell Reserve Bank of India that yes, we are ready to invest, my funds are ready, our co-investors are these, and then we give it to RBI, and then RBI goes to the government for notification of the final scheme, and as soon as final scheme is over, money, share application money is in account, shares are allotted, and the moratorium gets lifted.
Mr. Chidambaram has said that SBI was forced to acquire. How much of this is a business case and how much is a forced case?
I would like to keep away from any political comments. So please, that is not appropriate and right for me. But if you want to ask me that what would be the impact of this decision
On SBI, sir.
SBI,
Yes.
that question I am willing to
Yes.
answer.
Yes. Please go ahead.
So as far as SBI is concerned, we have assessed when any investment decision is taken by State Bank of India, what are the key considerations for any investment? That if we are investing this money, how safe is this investment, and over a period of time, because it is not a short-term investment, over a 3 to 5 year period, what would be our IRR? That is one. And second is, because for a bank to invest any amount above 10%, all that amount is deducted from the capital of State Bank of India, and to that extent it impacts our capital adequacy ratio. So this amount, whatever is being proposed, and even at the outer limit what we have said, we
Is
will
10,000
be
crore
well
is what you
within
said.
the capital adequacy ratio for State Bank of India. So one, we see the potential that whatever we are investing, we will be able to get a decent return. And what gives us that confidence is that the investors, the co-investors, there is a huge interest. When there is a huge interest, it means investors are seeing value in Yes Bank.
So you are
And,
saying your maximum exposure.
As I said, that
Yeah.
one of the most important,
No, go ahead. Please go ahead.
our maximum exposure at 49%, yeah, if the say the capital to be invested is 22,000 crore or 24,000 crore, or say 20,000 crore and above, so our exposure does not go beyond 10,000 crore.
Yeah.
But I believe that given the kind of investor response is there, we may be not even required to invest 10,000 crore.
The investors are, the investors, analysts are worried about the hidden skeletons in the cupboard. We know, for instance, the DHFL crisis, now ED is investigating that, 3,700 crore of that amount. We know that the NPAs are about 7.5% as per Q2. There's another 30,000 crore of debt under a watch. Together, all debt put together in default grade or in negative grade is almost 80 to 90,000 crore. How much of this do you have the visibility in terms of recovery?
So I think we should wait for the results of Yes Bank for 14th March. and there are informations available to the investors like us. So I would not like to make any disclosures as far as Yes Bank's balance sheet is concerned, and I would like to wait that on 14th March let them declare the result, then there will be 31st March results are there. So we would go by the disclosures made in the balance sheet as well as whatever our own internal due diligence is there, but this is something which I as a potential investor cannot disclose, and let us wait for 14th March.
Okay, Mr. Kumar, what is your message to the investor of Yes Bank, the shareholder of Yes Bank, the public shareholder? One, to the shareholder of Yes Bank, because he's worried that he's going to his equity holding is going to halve. Essentially 49% the government is taking over, in which case there should be I guess some write-offs, and some of the shares will reduce. What will be your message to the Yes Bank shareholder, and whatever is your message to the public shareholder of SBI? How much should he worry?
So I can definitely give a message to the minority shareholders and public shareholders of SBI that this decision will not have any negative impact on SBI as per our assessment, and I have explained the rationale. As far as Yes Bank investors are concerned, again it is not appropriate for me to give any assurance or message, but there are 255 crore shares of Yes Bank. Definitely when new capital is to be infused, there will be a dilution.
So their shares will proportionately
any
halve.
investor can make an assessment. So 50 on 49, but if the capital infusion is in the range of 20 or 22,000 crore, and then at what price, in what manner, so ultimately dilution of the existing shareholders, it cannot be avoided, because the Yes Bank needs fresh capital, and when fresh capital is infused, obviously existing shareholders, there is a dilution. So that is a maths which again, once the number of shares issued, at what price, all that is decided, then the extent of dilution will be known. But in general, not talking about Yes Bank and not about creating any panic about any bank or anybody, but in general, particularly for retail investors, the exchanges or regulators or the general message always is that for stressed asset, unless you have a very high risk capacity, then it is different. But if you are an ordinary small investor, then the message which I have learned is that you should always go for quality and stable stock, and the people who are speculators or the people who are in the business of stock investing, the regular operators, for them it is a different matter. They understand their risk reward metrics very well.
Mr. Kumar, the good big takeaways that I am taking from this interview is that you are saying that this is going to be resolved much faster than the 3rd April deadline, and you are also saying that depositors should be able to withdraw whatever they want, whatever is there in an account, well before this deadline, definitely not beyond this deadline. Number one. Number two, that there is going to be SBI's investment is ring fenced. Your maximum investing about 10,000 crore out of the 22,000 crore that will be put into Yes Bank. And the third is for the shareholders of Yes Bank, that their equity will halve, their proportionate shareholding in the bank will halve. Am I getting this right?
Or even it could be more, yeah.
Okay, so last question to you is...
it could be even more.
Slightly
That's
more. Okay.
Not absurd.
Okay. So my last question to you is, are you happy, are you very happy, or are you very happy?
So that is not the question. It is not about whether Rajnish Kumar is happy or State Bank is happy. The question is about that, yes, it is a little bit of a difficult situation for the financial sector in the country, and this started with the crisis in ILFS, and then subsequently a housing finance company, and then Yes Bank. But when you are in a difficult situation, it does not help that the debate is ill-informed, number one. Any effort by anyone to misspread and mislead, that should not be there. Third is the analysis has to be well researched. Different point of view, they are very much welcome. I have also been listening about this safety of public or private, or so one, we have to see that historically, in the history of the banking in this country, no bank has been allowed to fail, and depositors' money has been protected, irrespective of the fact that earlier the guarantee by DICGC was only up to 1 lakh, and now it is up to 5 lakh. But other than that also, there is an implied comfort that depositors' money will be protected. So one, we should believe in that. Second, about the ownership issue, whenever people compare private, public, now there always is some, what you call, some pride. Public sector banks, we take in the pride, we are very safe, and we have reach, we have distribution. Private sector bank, they always say that we have a very good customer service, this, that. So in a country like India, which is a very big country of 1.3 billion people, we will have to have a system where everybody coexists. So there will be private sector banks, public sector banks, small finance banks, cooperative banks, payment banks, and we need all of them. And we need all of them to be safe and sound. So any attempt to discredit any type of institution by virtue of the fact of their constitution, it is not done and it is not advisable. Individual entity, whether it is public sector, private sector, payment bank, cooperative bank, who are not governing and managing well, they have to be singled out. That is different. But to point fingers at any category of the banks and generalize, that is not advisable. And my request to you is also that, because your channel is a very respected channel, that this sense of responsibility, it needs to be displayed.
Mr. Kumar, I think your assurance to the depositors and to the investors is not that great news for investors, but definitely for depositors will, I think, really soothe a lot of nerves. Thank you for talking to India Today TV.
Thank you.
Hi everyone, Preeti Chaudhary here. Hope you like this video. For latest news and analysis, like and subscribe to the India Today YouTube channel. And don't forget to press the bell icon to stay updated. Thank you for watching.